Hello, and welcome to volume 32 of the Bellringer, where we're going to be discussing cryptocurrency, Bitcoin, and digital assets, differentiating the good and the bad with Tania Reif, founder and CIO of Senda Digital Assets. Prior to Tania's cryptocurrency focus, she built her investment pedigree at top macro hedge funds, including Soros Fund Management, Lorien Capital, Citadel, and Alphadyne Asset Management. Tania was profiled in the 15 leading women in hedge funds in 2017 survey by the Hedge Fund Journal, and her career spans public policy beginnings at the IMF and experience in the banking industry at Citigroup's Economic and Market Analysis team. She holds a PhD in economics with distinction from Columbia University, where she earned the Jagdish Bhagwati International Economics Award for her work in currency dynamics. And we are very excited to welcome you, Tania, to today's discussion.
Thank you. Happy to be here.
Terrific. Well, I hope you had a good Labor Day, and hopefully the end of summer is coming. We in New York are experiencing our heat wave. Wherever you all may be, hopefully we're getting into fall. So first off, Tania, how did you get into this space in the first place?
Yeah, so for me, I've been really a person that has dedicated my life to currency dynamics, to currency crisis in particular. And that's because I grew up in Venezuela, and which is a country that had really, really awful currency crisis throughout the year. Throughout the years, it had economic implosion most recently, growth implosion, really at some point, people starving, really desperate economic situation. And the way, as I was growing up there, that the government used to rebalance the fiscal accounts and the external accounts was by depreciating the currency. In our case, the country was an oil exporter, so the revenues are in dollars and the expenditures are in local currency. So whenever you depreciate the currency, the government has now, in relatively speaking, a lot better means to fulfill its obligations. So it would repeatedly debase the currency, depreciate the currency, and in so doing, it made the life for the layman, including my family, my colleagues, my peers, my friends, really, really very hard. I experienced, firsthand, looking at my parents, face with, impotence and fear every time we had this big, 30%, 50%, 100% currency devaluations that really wiped out our real income in a matter of days. So it was a very visceral experience, and that really motivated me to study currency. And that's why currencies and how they move and why they move. And that's why I came to the US to do my PhD at Columbia on currency dynamics. That's why I went to work at the International Monetary Fund in the hopes to help the world with a balance of payments and currency imbalances. And that's how I ended up eventually coming to the private sector to work on currencies, both in the sell side and in the buy side. And I spent, many years in hedge funds trading currencies and betting on unsustainable currency pegs like they had in my home country. So when Bitcoin came to the forefront, when crypto came to the forefront, it was very appealing to me because it offered an alternative to our current system of fiat currencies, of sovereign currencies. Sure. This was a new alternative that sat as, outside the banking system, outside the fiat currency system, but it was akin to gold, but it was digital gold. So it was easier to custody. Meaning easier in the sense that you could self-custody. You don't need an IOU. It's instant settlement. It's easily transportable. It's immutable. It had all these characteristics that were very appealing for a person that grew up in a country where there was broken money, where the monetary system was just not working. Now, of course, that is not the case in some of the more developed countries. The central banks have, a much better track record of managing, their currencies, but still the incentive for a central banker is in the interest of the collective, in the interest of society. Whereas for the individual that wants to store value, those interests may not be always aligned. And that's what got me very interested in crypto. I didn't feel like it was mature enough for me to jump into crypto in a professional sense until we had really maturation of the industry. I would say it started in 2017 with the big 2017, 2018 our first rally, of course, and then bust because it's very volatile. But then after 2020, with a huge tailwind from all the central banks around the world that were reacting to the pandemic and pumping liquidity into the global monetary system, that was a huge tailwind for crypto. And that's when I thought, okay, the industry is evolving, it's maturing, and I'm ready to jump in.
That's such an interesting background. And, looking at the space right now, and with your experience, what is your framework for thinking about the risks and opportunities in this space?
Yeah, so I think it's very important to think about what it is that cryptocurrencies bring to the forefront, what are the risks behind it, and what we have seen over the last year. And I think there is a lot of confusion because for the layman out there, they don't understand what of the big crypto volatility, the big implosion we saw in 2022, everything that happened, how much is a problem of crypto and what is a problem of bad actors? Where do those things intertwine? And do cryptocurrencies provide an opportunity of technology for growth and improvement of the world? Or on the contrary, are they bringing something to the table that is detrimental to our financial system, and we should ban it and keep it away? Of course, I'm in the camp that we should not ban it and keep it away. The technology is really fascinating. I think it's going to be disruptive and it's going to change the world for the better, especially so in countries where you need to have where we would like to have more financial inclusion, so more access to the banking system, to collateral, to loans, to credit for currently populations that don't have access. But let me take a step back and say why I say that. What we saw last year, it's important to distinguish that it was not a problem of the crypto technology per se. It's a problem of a number of bad actors that took either, in one case, the FTX case, likely fraud and using their customers' deposits in a way they shouldn't have. And that we have seen over the years in every single industry. So that is nothing crypto specific. We also saw in the likes of Celsius, in all the bankruptcies that we saw mid-year and last summer, this was poor risk management. So this is not a crypto technology problem. This is nothing that has to do with Bitcoin or even with other alternative digital assets. It was some centralized players that were taking too much risk in an irresponsible way, and they lost the money of their customers. In some cases, there might have been fraud. In some cases, it was just poor management. And that we have also seen in traditional markets. And that is just a matter of doing due diligence. And when you invest in anything that is related to crypto, make sure, where you're investing, things are audited, are transparent, are as best, the people that are managing this have experience. So you are involved using, your best judgment with people using best practices as much as possible. Those of us that were in the field, that were doing best practices, sailed through this without a problem. Those that were taking unduly, mismanaged risk had a lot of problems, so we saw a lot of bankruptcies. And then what we also see, sorry.
I just want to interject a little bit in here, because there have been some regulatory legislative proposals.
Yes.
I'd like to get your take on that, because some people are concerned that this will stifle innovation and such in the United States and force companies in this space to go outside the United States.
Yes.
The
aftermath of everything we saw last year, and the last one which I was going to mention is the Terra Luna breakup, which to me is like an emerging market currency peg blowing up, but it's just a poor design, but nothing intrinsic to crypto itself. But all these things, the Terra Luna blow up, the bankruptcies, the FTX fraud, they all have highlighted that regulators are concerned that this instability is going to spill over into our traditional markets, and we need to regulate the cryptocurrency landscape in a much better way. And I think those of us that want to see the space grow welcome proper, well thought of, constructive regulation. I think that's what we all want, because we want cryptocurrencies to exist together with other other currencies, other securities, other everything. The problem we have now is that the regulation is unclear,
Mm-hmm.
and the path to regulatory clarity has been bumpy, and some of the new proposed regulation has not been constructive in the sense that they are requiring some of the decentralized protocols to provide information that they just don't have access to by the nature of how the cryptocurrency world works. And so the combination of the lack of clarity, the lack of understanding for players on both sides, both the regulators and the exchanges and the investors, of what is permissible, what is lawful, what is the right way to go through things, and how should we do this in a proper way, and then trying to what they are the big problem we've had is that there's been regulation by enforcement. So without clarity in the rules, we've got enforcement of what to do and what not to do exposed, and that's obviously very confusing and very distressing for any investor, and it does keep investors away, keep everybody on their toes. The uncertainty pushes people outside the US to other jurisdictions where they have been more forthcoming with regulation. And so the push of the industry right now is, how do we get proper constructive relation with open conversations with players in the industry to have something that would allow everyone to feel comfortable, the industry to flourish, and traditional finance to benefit from the crypto technology, rather than just push it to offshore.
Sure. So what's your future view? I mean, do you see a movement both with the regulation and the investment and all of that? I mean, where do you see this in, I want to say 10 years, but I'm going to go to 5 years because it's such a volatile, fast moving space.
Absolutely. I actually think it's going to be much quicker than that. So this is the thing to understand for your viewers. Cryptocurrencies is you can't shut down crypto just as you can't shut down the internet. So these public blockchains are here to stay. So eventually, when you have some technology that is so disruptive and so powerful like that, what will end up happening is the regulators will have to make peace with it and will have to find a way to work with it and integrate it into a system in our best possible way. We have seen already a lot of our, traditional players want to get involved. Clients are demanding it. Obviously, the most glaring example is BlackRock applying for an ETF, a Bitcoin ETF. But there's plenty of players that are interacting with crypto, from governments issuing bonds in Ethereum. You have PayPal now as well coming the stablecoin space. You've had Visas and MasterCards, looking into the payment rails, and we see cryptocurrencies and public blockchains, filtering in all parts of the ecosystem, and that's likely going to continue. And the regulators are going to have to, wrestle to how do they do this properly with the industry. There's going to be conversations, there's going to be debates, but things are going to move forward because this is here to stay. And I think eventually we will all realize in the US and elsewhere that if you don't embrace it and you don't open yourself to it in a proper way, you're going to miss out to other people that are going to do this much quicker. It's like what I say is that yes, there are scams, there are frauds, but you don't shut down
everything.
You don't ban your iPhone because you get scam calls on it. You embrace the technology and you try to do whatever you want to get the bad guys out of the system, and make sure that things are run in the best possible way, and that with the responsible players that want to do the right thing and want to see things grow in a good way.
Tania, thank you so much. Just for our viewers, this is a bit of a taste. Tania is going to be on our September 21st panel here in New York City, and I hope those of you who are in the area come join us. You can check it out, find us through our website or on Eventbrite. And Tania, thank you again for your insight.
Thank you.
It's very much appreciated.
Thank you. Looking forward.
Thank you, and thank you all. Have a good day.